What you are about to hear is something the mainstream financial media will never tell you, because the moment this information becomes common knowledge, the entire system as we know it will face a reckoning that has been decades in the making. And today I am going to break down exactly what just happened, why silver breaking through the $72 barrier is not just another price movement, but a signal that the banking elites are losing control of the precious metals market for the first time in modern history. So if you are watching this, please stay until the end, because what I am about to reveal could change how you see your money, your savings, and your financial future forever. And before we dive deep into this, make sure you hit that subscribe button and turn on notifications, because the information I share on this channel is time sensitive and you do not want to miss a single update. Now let us get straight into it. Silver has officially broken through $72 per ounce, and this is not just a number on a screen. This is a psychological barrier that the big banks have been defending for years, using every trick in their playbook, including paper contracts, naked short selling, and coordinated price suppression through the COMEX futures market. But now something has fundamentally changed, and the banks are panicking because they know that once silver breaks free from their manipulation, the price discovery mechanism will shift from the paper markets in New York and London to the physical markets in Shanghai and other Asian exchanges where real metal changes hands. And this is their worst nightmare, because for decades the big bullion banks have been selling paper promises of silver that they never actually had in their vaults. They created a fractional reserve system for precious metals, where for every 1 ounce of physical silver sitting in a vault, they sold perhaps 100 or even 200 paper claims against that same ounce. And this worked perfectly fine as long as nobody actually asked for delivery. As long as traders were happy to settle in cash and roll over their contracts, the game could continue indefinitely. But now something has changed, and that something is Basel III, the international banking regulation that went into full effect and reclassified physical gold as a Tier 1 asset, while simultaneously making it much more expensive for banks to hold unallocated paper gold and silver positions on their books. And this might sound technical, but let me explain why this is a game changer. Under the old rules, banks could hold massive short positions in gold and silver with very little capital set aside as collateral, but under Basel III, these paper positions now require significantly more capital, which means the cost of suppressing precious metals prices has gone through the roof. And we are seeing the effects of this right now as silver smashes through resistance levels that have held for years, and the big banks are scrambling to cover their short positions before they get completely liquidated. Now let me give you some context about why $72 silver is such a big deal. If you adjust the 1980 high of $50 per ounce for real inflation, not the fake government CPI numbers but actual monetary inflation, silver should be trading somewhere between $300 and $500 per ounce right now, which means that even at $72 silver is still massively undervalued relative to the amount of currency that has been printed over the last 4 decades. And this is what the banks are terrified of, because once retail investors and institutional money starts flowing into silver, recognizing this historic undervaluation, the demand will overwhelm the tiny physical silver market, and prices will go parabolic in ways that will make the GameStop short squeeze look like a warm-up exercise. And speaking of the physical market, let me tell you what is happening at the COMEX right now, because this is where things get really interesting. The registered silver inventory at COMEX, which represents the silver that is actually available for delivery, has been declining rapidly over the past 2 years, and we are now at levels that are dangerously low relative to the open interest in futures contracts, which represents the paper claims against that silver. And the math simply does not work anymore. For every ounce of registered silver at COMEX, there are now multiple claims from entities who believe they own that silver. And when silver breaks $72 and starts heading toward $80, $90, and eventually $100 per ounce, more and more of these paper holders are going to demand physical delivery, because they know that holding a paper claim is not the same as holding real metal in your hands. And this is when the COMEX will face a delivery crisis that will expose the entire fractional reserve precious metal system for the fraud that it has always been. And the banks know this is coming, which is why they are panicking and trying to close out their short positions before the whole thing blows up in their faces. Now you might be wondering, why is silver moving so aggressively right now? And the answer has multiple layers, but let me highlight the most important factors. First, we have unprecedented demand from the solar panel industry, which uses silver in photovoltaic cells, and with governments around the world pushing green energy initiatives, the industrial demand for silver is exploding at the same time that mine supply is stagnating, because silver miners have been underfunded for years due to artificially suppressed prices. And this supply-demand imbalance is now reaching a critical point where there simply is not enough physical silver to meet both industrial demand and investment demand simultaneously. Second, we have central banks around the world, particularly in Asia and the Middle East, who are aggressively accumulating precious metals as they prepare for a world where the US dollar is no longer the dominant reserve currency. And while most of the headlines focus on central bank gold purchases, what many people do not realize is that silver is also being accumulated quietly, because smart money knows that silver has historically been used as money alongside gold, and in a monetary reset silver will be revalued. Dramatically third, we have the retail investor movement that began during the pandemic and has continued to grow with communities of silver stackers buying physical coins and bars at a pace that the mints cannot keep up with, and this grassroots movement is putting constant pressure on the physical market, draining supply from dealers and forcing premiums higher, which is another sign that the paper price has become disconnected from the real physical market price. And fourth, we have the geopolitical situation with tensions between the United States and China, Russia, and other major powers, creating uncertainty that is driving investors towards safe haven assets, and precious metals have been the ultimate safe haven for thousands of years, long before stocks, bonds, or cryptocurrencies existed. And in times of crisis, people instinctively return to gold and silver because they know that unlike paper currencies or digital tokens, precious metals cannot be printed into oblivion or erased with a keystroke. Now let me address what the banks are actually doing right now, because understanding their playbook is essential if you want to navigate this market successfully when silver breaks through major resistance levels like $72. The banks typically respond with a coordinated attack using massive paper short selling to drive the price back down and shake out weak hands, and we have seen this pattern repeat dozens of times over the years, where silver spikes higher, retail investors pile in excited about the momentum, and then the banks dump millions of ounces worth of paper contracts onto the market in minutes, crashing the price and causing panic selling. But here is what is different this time. The banks are running out of ammunition because their physical reserves are depleted. Their paper short positions are becoming too expensive to maintain under Basel III, and there is a wave of physical demand from Asia that is not going away, and every time they try to smash the price down, now buyers step in immediately to scoop up cheap silver and demand delivery, which drains even more metal from the vaults, and this is a losing game for the banks, and they know it, which is why we are starting to see some of the big players quietly reducing their short positions and even switching to the long side, because they see what is coming and they want to be positioned on the right side of this trade before the whole thing explodes higher. Now I want to talk about what this means for you personally, because if you are watching this channel, you are probably someone who understands that the financial system is rigged against ordinary people, and you are looking for ways to protect yourself and potentially profit from the coming changes, and silver is one of the best opportunities available right now for several reasons. First, silver is still affordable for ordinary people, unlike gold, which trades at over $2,000 per ounce. You can buy silver coins and bars for reasonable prices, which means you can start building your position without needing a fortune, and this accessibility is important because it means average people can participate in this trade alongside the billionaires and hedge funds. Second, silver has more upside potential than gold, precisely because it has been more heavily suppressed. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has historically averaged around 15-1, but right now it is closer to 70 or 80-1, which means silver is extremely cheap relative to gold, and when this ratio normalizes, silver will dramatically outperform gold on a percentage basis. Third, silver is a tangible asset that you can hold in your hands, unlike stocks or crypto, which exist only as digital entries in a computer. Silver coins and bars are real physical objects that cannot be hacked, cannot be frozen by government order, and do not depend on the electricity grid or internet to retain their value. And in a world where cyber attacks, financial system failures, and government overreach are becoming more common, having some of your wealth in physical form outside the banking system is just common sense. Now let me give you some practical advice on how to approach silver investing. First, you need to understand the difference between paper silver and physical silver. Paper silver includes ETFs like SLV futures contracts and unallocated accounts at bullion banks, and while these products are convenient, they come with counterparty risk, meaning you are depending on someone else to actually have the silver they claim to have. And as we have discussed, the banks have sold far more paper silver than they actually possess, which means if you are holding paper silver, when the music stops, you might find out that your claims are worthless and you will be settled in cash at a price determined by the very institutions that caused the problem in the first place. Physical silver, on the other hand, means actual coins and bars that you hold in your possession or store in a secure vault outside the banking system, and this is the only way to truly own silver with no counterparty risk and no dependence on the integrity of financial institutions that have proven themselves unworthy of trust. Now, I am not saying you should go out and put your entire life savings into silver tomorrow, because that would not be prudent financial advice, and I am not a financial advisor, and nothing in this video should be construed as personalized investment recommendations. But what I am saying is that having some portion of your wealth in physical precious metals is a rational hedge against the systemic risks that are building in our financial system, and the fact that silver has just broken through $72 suggests that we may be in the early stages of a major repricing event that could take silver much, much higher over the coming months and years. And speaking of higher prices, let me share some projections from analysts who study the precious metals markets. Some conservative analysts believe silver could reach $100 within the next 12 to 18 months as the supply deficit continues to widen and investment demand accelerates, but other analysts who account for the full extent of monetary inflation and the potential for a dollar crisis believe silver could eventually reach $200, $300, or even $500 per ounce in a scenario where confidence in fiat currencies collapses and there is a rush into hard assets. And while these higher price targets might sound crazy to someone who is used to seeing silver trade at $20 or $30, you have to remember that we are living in unprecedented times where central banks have printed more money in the last few years than in all of previous human history combined, and all of that money has to go somewhere, and when it starts flowing into tiny markets like silver, the price impact will be explosive. Now let me address some of the risks, because it would not be responsible to only talk about the potential upside without acknowledging what could go wrong. First, there is the risk that the banks mount one more major attack on silver to try to shake out speculators before they lose control completely, and this could result in a sharp short-term pullback that tests the nerves of anyone holding silver positions. So you need to be psychologically prepared for volatility and not invest more than you can afford to see decline temporarily. Second, there is the risk of government intervention. Because if silver really starts to threaten the stability of the banking system, governments could impose restrictions on silver trading or even attempt to confiscate silver holdings like Roosevelt did with gold in 1933. Although such measures would likely backfire by destroying confidence in the government and accelerating the flight to hard assets. Third, there is the risk that some other event like a major deflationary crash or a severe recession could temporarily push silver prices lower as investors liquidate all assets to raise cash. Although historically silver has performed well during periods of financial stress, once the initial panic subsides. So these are real risks that you need to consider and factor into your decision-making, but in my view the potential rewards far outweigh the risks at this point, because the fundamental setup for silver has never been better and the banks have never been more vulnerable. And this brings me to my final point, which is about timing, because one of the most important concepts in investing is being early enough to capture the majority of a move, but not so early that you have to endure years of pain before the thesis plays out. And with silver, I believe we are at an inflection point where the thesis is finally playing out in real time. The $72 breakout is confirmation that the supply-demand dynamics have shifted in favor of higher prices. And while there will certainly be corrections along the way, the trend is now clearly higher, and trying to time the perfect entry is less important than simply getting positioned before the really big moves happen, because when silver goes from 72 to 100 or from 100 to 150, you do not want to be on the sidelines wishing you had acted when you had the chance. So that is my message for today. Silver has broken $72, the banks are panicking, and the precious metals market is entering a new phase that could reward patient investors handsomely while punishing those who ignored the warning signs and remained fully invested in paper assets that depend on the continued stability of a financial system that is anything but stable. If you found this video valuable, please hit the like button and share it with anyone you know who needs to hear this information, and subscribe to the channel if you have not already, because I will be providing regular updates as this situation develops, and you want to stay informed about what is happening in the precious metals market. And as always, I want to hear from you in the comments below. Do you think silver will reach $100 this year? Are you stacking physical silver, or do you prefer paper products? Let me know your thoughts and let us have a conversation about what is really happening in the financial system. Thank you for watching, and I will see you in the next video.